What's happening right now with the Social Security Administration is something people need to pay attention to. A lot of government offices are already overwhelmed with phone calls, appointments, and processing delays, and it looks like it's going to get worse before it gets better. Social Security alone has reportedly lost more than 7,000 employees. And it's not just the number, it's the loss of experienced technical staff who know the rules and can actually fix problems. When that happens, the public feels it immediately. Longer waits, more errors, and fewer answers. This is live, and I've got a lot of questions coming in. I will get to them. But first, I want to cover the biggest mistakes people make with Social Security, because every time I try to do a list of 7, I think of another 10. I'm going to keep it focused so we still have time for Q&A. If you've got a question, type it in the chat. Also, keep me posted on what's happening in your state, especially with Medicaid. I can cover the national Social Security and Medicare picture all day long, but Medicaid is run state by state, and we're seeing more people pushed off coverage for paperwork and administrative reasons. If you notice people getting dropped when they shouldn't be, or new obstacles being added, post it in the comments or chat. I read everything even if I can't respond to everything, and this community at Senior Security Benefits helps each other by sharing what's happening on the ground. Now, mistake number 1. People take benefits at 62 without understanding what that choice really means. For retirement benefits on your own record, 62 is the minimum benefit age, and it usually means roughly a 30% reduction compared to what you'd get at full retirement age. A related mistake is not realizing that survivor benefits follow different rules. Survivor benefits can start at 60, not 62, and that difference matters for a lot of families. Mistake number 2 is believing that once you collect Social Security, you can't work. That is not true. You can work while collecting benefits, but if you are under full retirement age, you must watch the earnings limit. This year, the limit is $24,480, and if you go over it, Social Security typically withholds $1 for every $2 you earn over that limit. Once you reach full retirement age, the earnings test goes away. After that point, you can make as much as you want, and it doesn't reduce your Social Security check because of earnings. Mistake number 3 is not understanding how the earnings limit changes in the year you reach full retirement age. In that specific year, the limit becomes $65,160, and the withholding changes to $1 for every $3 over the limit. But here's the part that confuses everyone. That higher limit typically only applies to the months before you hit full retirement age. After you reach full retirement age, the earnings test stops applying, even if you're still working. Mistake number 4 is not knowing about the first-year rule and the monthly earnings logic, which causes a ton of confusion, especially late in the year. People come in January and say, "I didn't file last year because I earned too much." But in many situations, what you earned before you started benefits doesn't matter the way people think it does. For example, if you start benefits in July, Social Security may focus on what you earn after July for that first-year decision, and it may not count what you earned between January and June in the same way. The takeaway is simple. The year you start benefits has special rules, and you should always ask how your specific start month affects the earnings test. Mistake number 5 is not checking your earnings record. Your benefit is calculated from your earnings history, specifically your highest 35 years, and those years are indexed. If your earnings record is wrong, your benefit can be wrong. You should check your record before you file, when you file, and even after you start benefits if something doesn't look right. Mistake number 6 is discounting low years and assuming they don't matter. People say, "I made $20,000 when I was 18, that won't count." It may count more than you think because Social Security uses wage indexing. That old $20,000 year can be worth much more in today's indexed dollars. So don't assume the early, lower-earning years are irrelevant. Mistake number 7 is waiting past age 70. I see this all the time. Someone says, "I'm 74, when should I start?" The reality is delayed retirement credits stop at 70. If you claim after 70, you're not maximizing. You're missing checks you could have received. The maximum retirement benefit month based on delayed retirement credits is the month you turn 70. Now let me add a couple of bonus mistakes because they're too important to skip. A big one is misunderstanding survivor strategies. Survivor benefits still have flexibility that many people don't realize. In many cases, you can take survivor benefits first and let your own retirement benefit grow, then switch later, up to age 70 on your own record. Some people think strategies like this were taken away, and while some spousal rules changed years ago, survivor benefits are still an area where you often can choose one benefit now and switch later if it makes financial sense. Another bonus mistake is not knowing about independently entitled divorced spouse benefits. If you're divorced, you may be able to claim on an ex-spouse's record even if your ex has not filed yet. As long as you are both at least 62, you've been divorced at least 2 years, and you meet the marriage length requirement, typically 10 years. People are often told incorrectly that the ex must be collecting already. That's not always true under these rules, and it's one of the reasons so many people miss money they could have received. All right, now let's get into some questions. Bruce asks, he's on survivor benefits, reached full retirement age in January, and has an appointment on the 6th to switch to his own benefits. Can he make it retroactive to January and collect the difference? In general, once you're past full retirement age, Social Security can often pay up to 6 months of retroactive benefits, depending on the timing and eligibility. Since he reached full retirement age in January, that's a reasonable retroactivity request to make. I'll also remind you, though, your benefit on your own record continues increasing until 70, so switching now may be right, but it's always worth confirming the numbers before you lock it in. Here's another question. Someone asks if they get half of a spouse's benefit tacked on, or if they only get the difference. The way it works for spousal benefits is basically a top-up. If you're at full retirement age, the spousal maximum is usually 50% of the other spouse's full benefit amount. But Social Security doesn't pay that on top of your full benefit. They pay your own benefit first, then add just enough from the spouse benefit to bring you up to that spousal level. And I need to say something important here because it's a planning mistake that hits people hard. When one spouse passes away, you don't keep both checks. Most of the time, you keep the higher one and the lower one goes away. That can mean the household drops from 2 checks to 1 overnight, and people need to plan for that reality. I also want to address a question about SSI because people mix these programs up all the time. Social Security retirement, survivor benefits, and SSDI are based on work credits. SSI is a needs-based program with strict income and asset limits. If you're on SSI, changes in household, marriage, divorce, bank balances, and living arrangements can affect eligibility. SSI cases are fact-specific, and it's critical to report changes promptly and get clear guidance based on your actual situation. I saw a question about disabled adult child benefits, sometimes called DAC. If a child is disabled and the disability began before age 22, that child can sometimes receive benefits off a parent's Social Security record if that parent retires, becomes disabled, or passes away. While the parent is living and collecting retirement, the child benefit can be up to 50% of the parent's full benefit amount, subject to family maximum rules. If the worker passes away, survivor child benefits can be higher. These cases also involve proving disability status under the correct rules, and it can take time even when it seems obvious. I also got a question about a text message telling someone to click a link and report monthly earnings. Don't click it. Even if Social Security sometimes communicates electronically, links in random texts are a huge risk. The safe approach is always the same. Delete the message, go directly to ssa.gov or your official account, and verify whether anything is actually required. There was a question about Medicare at 65 when someone is going onto a spouse's employer plan and wants to delay Part B. Generally, if you have qualifying employer coverage, you can delay Part B without penalty and enroll later when the coverage ends. Part A is usually premium-free for most people and can start at 65, but if you contribute to an HSA, Part A can create tax complications because it counts as coverage. If an HSA is involved, confirm the timing with your benefits administrator or tax professional before starting Part A. Finally, for anyone thinking about switching from survivor benefits to their own retirement at 70, the process is usually straightforward. But you still need to contact Social Security to make the switch official and to confirm which amount is higher. Operational changes might affect where the claim is processed, but the key is scheduling the appointment, choosing your start month, and confirming the numbers before you finalize anything. We're past an hour and I couldn't get to every question, but I'll keep doing these because the biggest mistake people make is simple. They don't know what they don't know, and the system often doesn't have the time to explain it. Keep sharing this information so fewer people miss benefits or make irreversible timing errors. If you want your question prioritized, submit it as a short video question through Senior Security Benefits, and I'll pull it into the next episode. Thanks for being here, and please take care of each other.